Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going out on the 14th of August 2021. Now, before I switch over to my screen share and of course walk you through a lot of the charts, a lot of the areas of the market and the individual stocks that I think are potentially poised to move higher or lower, depending on what the trend looks like. I had a lot of questions, a lot of emails, a lot of messages on social media over the last couple of weeks regarding a few of the charts that I've posted. Now, I think one thing to say before I get into this is, for those of you that are maybe just stumbling across my work, maybe somewhere on social media, I'm not a day trader. I couldn't think of anything worse. My time horizon is traditionally weeks to months. I'm primarily a trend follower. There are elements of swing trading involved, but I think if you were to kind of pin me down and say, Sam, what style, I would say technical investor. I use technical analysis. I'm looking for good companies, and hopefully you get some insight from this. I'm told my work is incredibly good, but I'll let you be the judge of that. So let's dive into the charts. Let's switch over to the screen share and let's see what the market's telling us, and hopefully you get some insight. Now, before I get into the charts, as always, please pause the video. Make sure you're comfortable with that before watching. Basically just says there's not any investment advice, and don't be silly, do your own due diligence. Maybe to give myself a little bit of credibility, most of you know this, that I'm working my way towards my CMT, Professional Market Technician designation, and it's a big deal in the technical world, and technical analysis is something that I'm very widely known for in professional circles. And if you get value from this, please do subscribe to the channel. Let me know what stocks I'm missing. If there's any stocks, any charts that you think should be on the radar, feel free to share in the comments. So I think where I will probably start off here is just spend a few minutes walking through the broader market. I think many are wondering why the market's at all-time highs. Now, first thing to say is I don't care why the market is at all-time highs. I just see it as is. I see the world and I guess charts and ones and zeros. I don't need to assign a reason to anything. And for me, it's very, very straightforward here for the S&P 500. This has been my chart for months. For those of you that have been following me for a while, we met the upside objective in the S&P 500, and lo and behold, the market has broken out again above a significant Fibonacci level, which, as the chart can demonstrate, holds some significance. So we're bullish on the market. I don't care if the market's at all-time highs, as I said before. Something that I think is lost on many is breadth. Now, what breadth is, if you think about and I'm using here the percentage of stocks that are trading above their 50-day simple moving average, what we tend to find when we have these short-term pullbacks is the percentage of these stocks declines. And what you tend to find is when this happens, you start to see all the news headlines, crash imminent, correction imminent, choose your narrative. But what I look at is, and fully understand, is when we get this deterioration of breadth, it's always followed by an expansion. Now, the market's not going to crash again. Now, the market crashes, let's just say every 10 years, 5 years, whatever it is. But along the way, we do have to deal with these little mini corrections. And in my view, I think we've had a stealth correction already. The percentage of stocks that above the 50-day simple moving average hit a low there on the 18th of June. Now, that represented for many of the individual names, especially when we're talking about the small caps, a lot of these names have been cut in half, and a lot of the big tech companies, for example, a lot of them did correct during this period. And what we're seeing now is a textbook expansion. So when we get this deterioration of breadth, it's usually followed by an expansion, and that's what we're ultimately seeing. when we get this deterioration of breadth, the job at that point is to identify the stocks that are not being hit and to stay with the stocks that are showing that relative strength and that relative outperformance. And that's been my philosophy, I guess, over the last few months. I've not been bearish on the market, quite the opposite. I've been very bullish, but just identifying the stocks and the names that are going up rather than the ones that are going down. Now, when we look at the equal weighted S&P 500, again, those of you that follow me on social media, I posted this chart a couple of weeks ago just highlighting that this is textbook technical analysis. We have uptrend, consolidation, uptrend. We're breaking out again. This chart equally weights the S&P 500 as opposed to the traditional S&P 500, which is cap weighted, and it looks like we're getting a broad-based breakout in the S&P 500. So the Dow's breaking out. We've got technology again. Everybody's freaking out on early in the week, but again, this has been my chart. The 20 period simple moving average is doing its job at the moment, and the market's continuing to just kind of grind higher, and don't know about anybody else, but I'm thoroughly enjoying it at the moment. Small caps is a little bit of a different story. We are stuck in a sideways range at the moment. Last month I highlighted this level as an area of interest, and of course we know with ranges they tend to go from the bottom to the top. If the S&P 500 is going to continue to moving higher, if we have the Dow moving higher, you would expect the Russell 2000 to start to move to the top of the range. But for me, the small caps aren't terribly interesting at the moment. Maybe there's a position here and there, but my work at the moment is focused mainly on quality names that are performing very, very well. Now, to highlight, I guess, the growth versus value debate, one of my clients this week asked me, Sam, where should we be, growth or value? Now, I just want to highlight this is the monthly chart. Now, this compares the ratio between growth and value. If we're above this line, it means that growth is outperforming value. Now, this is obviously a monthly chart, so it's a long-term chart. But what I want to show is if we drill it down to the daily here, we can see that it's just a sideways mess. Now, what that chart tells me is that growth and value are essentially going up together. So those of you that are fixated, I guess, on growth names, I get it. It's where, a lot of the returns have been made over the last few years. But what I want to just kind of highlight is don't discriminate against some of the value names, because I have a few value names in here, traditional value names, and those names are going up quite a bit. So let's dive into the individual names. I think I've got around 25 prepared this week, and as most of you know, I don't use the magical hindsight indicator. I think these names warrant some due diligence, and I think they should be added to your watch list. Now, I think if I'm not highlighting a potential breakout in Apple, then I should probably hand back my professional analyst card. If Apple breaks out above 150, I think that's probably good news for the broader market, given the weighting. There's plenty of room to run with RSI, and we've got rising relative strength. I'm often asked about what this indicator is. This indicator just compares the name, in this case Apple, against the S&P 500. If this line is rising, it tells me that Apple is outperforming the S&P 500. If you're looking for outperformance in your portfolio, this is a very useful tool. I guess not everybody has access to this tool, because I believe there's issues, I think, with the likes of TradingView, for example, but I find it very, very useful. Now, Airbnb reported earnings this week. Now, I had a little bit of a look at the earnings. The earnings looked okay, but what I'm essentially looking for is the reaction to earnings. Now, as we can see on Friday, there's been a favourable reaction to earnings. We have the international travel starting to move here in Europe. I don't know what the situation is necessarily in the US. I think there's certainly issues with Europe going into the US, but going from the US to Europe seems to be okay. And I think Airbnb is now starting to make sense, both from a technical perspective and probably a fundamental perspective as well. So it'll be interesting to see if there's follow through in this next week. As we can see, it's trading well below its previous highs, and it's a name that I quite like. Now, for disclosure, I own plenty of Square Inc. It's a stock that's been recommended to many of our clients and members over the last couple of months. I'm still waiting for a breakout here above 285, but it does look to be forming a bit of a double bottom chart pattern. Speaking of double bottoms, we've got C Limited now. I get asked about this chart all the time. Probably one of my most requested names. I guess everybody understands that it's a great company and it's likely to go much higher over time. I think there's a case to be made here. I think there's going to be probably an earnings catalyst. I don't know when they report actually, but I think there's a double bottom breakout here, and I think very easy to kind of define the risk. If you start to break below previous lows, then you can maybe cut your position and not take any chances in case it decides to decline 20%. But I like it. I think it's potentially breaking out there. Now, Amazon, interesting. I think we're holding the 200-day simple moving average at the moment, but what I'm more interested in here is the RSI. Now, many of you will have learned the old trick that if you buy stocks when they reach oversold conditions and you sell them when they reach overbought conditions. Now, the other way to use RSI is slightly different. When stocks are in technical uptrends, they never reach oversold conditions. Now, if in this case Amazon hits oversold conditions, that would tell me that there's a bit of a potential issue here, because as we can see here, it hasn't reached oversold conditions in a couple of years. And if we reach oversold conditions, that is a characteristic of a downtrend, not an uptrend. So you would expect the sideways choppy mess to continue. So this tends to be quite a good buy point historically, but I guess if Amazon declines below its 200-day and hits oversold conditions, that could be a long-term problem for Amazon. But at the end of the day, it's obviously a great company, but it's now turning into one of those value dinosaur names, and I don't tend to give much time to those. But since I'm asked about Amazon all the time, that's my chart. Big pullback in Match Group. Now, we're in a big sideways range at the moment, and given the pullback that we've had over the last couple of weeks, I think the 131 to 133 level could be a buy opportunity. As we can see, it's in a sideways range. As I talked about with the Russell 2000, with ranges, they tend to go from the bottom to the top. And the good thing about technical analysis is, although it doesn't give us a magical crystal ball into the future, what it does help us to do is to define risk. So, it's very easy at this point to say, do you know what, we can buy this at 131, 133, choose your number. But if you start to break below these levels, that would probably indicate to me that there's something wrong with the stock, and might want to cut losses and just not take any chances, just in case it does decline that a further 10, 20, 30%. But I guess if you get some kind of bounce from this 131 level, I think it's a risk to reward, and of course that's the range size. We've got Salesforce, great company, very close to breaking out. I'm viewing this as a cup and handle pattern. I like it above 255. We've got Thermo Fisher here. Now, I covered this one a few weeks ago in my last video, just highlighting the 10-month consolidation, how it hasn't reached oversold conditions. So RSI is in a bullish range, and it has broken out and it does look like it's starting to move. Now, I've no idea how far it will go. I think the thing to maybe do is perhaps have a process in place, some kind of trailing stop loss that just keeps you in the position. Having a process helps, stops you second guessing every 2% move. Should I sell? Should I buy? I like to have a little process and stick to it. DocuSign, disclosure, I own plenty of DocuSign, and I'm looking for a further breakout here above 311. It does look like it's starting to range at the moment, so I think this looks to be some kind of significant level for the stock. So I mean, I think for me personally, I'm just remaining bullish on it. As long as we're above this breakout level, I'm accepting that it might just chop sideways for a couple of weeks, but ultimately I'm looking for a further breakout above 311. Facebook, what's not to like? I think above 365. Now that this is a Fibonacci chart, I think that it put in a little bit of a failed breakout here. It's pulled back again to its 50-day simple moving average, which, in good uptrends, this is generally quite a good buy point. And for those of you, I guess, that like the whole buy low, sell high game, pullbacks oftentimes offer opportunity, and I think Facebook looks like it's primed to break out. DHI, I know there's many of you that bought in a few weeks ago. I actually posted to social media on the back of earnings here and just said, look, I think this is a good earnings discount. What the earnings discount essentially is when you get a company that reports blowout earnings, really good earnings, but Wall Street finds a way to reduce the stock price, after hours, pre-market, shake everybody out, and then lo and behold, the stock declines, but then the following day the market starts buying up that discount. I call it the earnings discount, and it's doing very, very well, and ultimately I see further 10% upside there. CrowdStrike, sideways range, again, ranges bottom to the top. I think this is a logical buy point for me, but again, we'll see how the market reacts. I think there's potentially earnings coming up soon with that, so certainly have some kind of rule set in place for earnings. CVNA reported earnings last week. I had a look at the earnings. I think, if memory serves me correctly, they reported their first ever profitable quarter, and that short interest has some merit to me. Of course, with high short interest, there's high risk, but again, this has been my chart for CVNA for a couple of months since it broke out here above 328, and ultimately I see this starting to move towards 500 on the back of positive earnings. We've got Alphabet, Google approaching a logical upside objective here. As we can see from the chart, the Fibonacci levels have some merit here. So I think around the 2,900 level would be an area that you would want to keep an eye on. I think, the way that I view this is, well, yes, it's in a long-term structural uptrend, but, it can take 6 months for these levels to actually clear. So the way that I approach the market is I'm quite happy to just say, thank you very much, Mr. Google, and, move on to another stock. But I understand there's certainly the long-term investing mindset, and many just don't want to let go of companies like Google, and I totally get it. I'm the same with Apple. But yeah, I think there's a logical level where Google might take a little bit of a pause. We have Home Depot. I like it above 345. It's looking like it's building the right side of a base, very, very close to hitting our upside objective here from this breakout, and we'll see how it reacts at that 345, 346 level, but very, very close. And I would ultimately expect a company like Home Depot to break out there. Moderna, what feels like a million messages on this one. I've covered this one a few times now. What's happened now with Moderna is it's had a parabolic move. Now, what I want to just draw your attention to is the RSI level. When RSI hits 85, Moderna tends to sell off. Now, also, many of you will give zero weighting to the significance of the psychological round numbers. Moderna has run into a brick wall at $500. This is very, very normal. You have the same psychological barrier at $50, $100, $1,000. The $500 barrier is very, very real, and it's sold off. But what I want to draw your attention to is that it's still trading above its 20-day simple moving average. It has pulled back, of course, quite significantly. RSI has pulled back to a level where you would expect to pull back to, and the long-term structural uptrend is still intact. I think the way that I would view this one is if it starts to break below previous lows and below the 20-day, that probably tells me that it's about to pull back a lot further. So certainly that's the chart from Moderna. I don't know if I can put it any better. I covered this one 2 months ago, highlighting this breakout here, and of course it's been a massive winner, and it's run into a $500 barrier. We've got Nvidia very close to breaking out. I think earnings could be a potential catalyst for this one, so I'm looking for a breakout here above 210. Disclosure, I own plenty of Nvidia, and certainly I'm looking for this breakout here. Roku has pulled back as expected. I think if you followed my video last month, I highlighted this $500 level as a level of significant interest, and for new positions it would need to break out above that. It has pulled back. It's pulled back to its 200-day simple moving average. If it breaks below this, then it's probably going to pull back, and it's going to be range bound, and it's going to offer perhaps a better discount. But at the moment, I think this is a key level for Roku. Not terribly interesting to me at the moment. I think there's better charts, there's better setups out there, but those of you that like the whole buy low, sell high, that 200-day, I think you would need to keep a close eye on that one. T-Mobile, I like it above 150, very close to breaking out. It does look like it's just kind of coiling up, ready to move, and of course I'm using a Fibonacci level, and I think if it gets above 150, I think that's the number to aim for. Trade Desk, Friday wasn't great, pulled back quite significantly. We've got earnings out the way, but it does look like there's a bit of a trend line support level. Again, potentially broken out. I don't know what will happen early next week, but I'd be keeping a close eye on Trade Desk just in case it does start to break below these levels. Again, those of you that investing and buy hold, again, I get it. I'm not telling anybody how to manage their portfolio, but from a technical perspective, I think it makes a lot of sense to perhaps have some kind of plan in place in case it does start to kind of break down. AMD, massive 12 months sideways range, monster breakout. Again, you'll have heard me say this a million times. Pullbacks and uptrends oftentimes offer opportunity. That's exactly what that pullback was. All we had was an overbought pullback, and I think it's probably going to move higher in the next couple of weeks, provided of course that the market doesn't fall off a cliff for whatever reason. Ethereum, again, those of you that follow me on social media, I posted this chart before this breakout here. Of course, Ethereum doing what Ethereum does. It's volatile, it's going up. But what I want to just kind of highlight, I guess, with my own personal view on Ethereum, because I own quite a bit of Ethereum, as an ambulance drives past, we have volatility. Now, I'm fully accepting of this volatility. For many, it's a problem, but I think with risk allocation, position sizing, it's incredibly important and helps me sleep at night. So, for me, of course, I've got my upside objective here around $4,200, but I'm very, very prepared for this type of volatility. I ultimately see Ethereum going way, way higher than it is, and I'll check my crypto account next year, and that's the way that I view. But we're certainly looking like we're heading towards that 4,200 level. Mercado Libre, Melee, let's call it Melee, broke out on the back of positive earnings. We've built a flag, and it looks like it's potentially building another flag here. Ultimately, I see this hitting the $2,000 level. Again, psychological round number barrier. Yeah, we'll see what happens at that level and if it can get another breakout. Snow is another one that I get asked about a lot. I think it's very, very close to reaching our target level here. I covered this one a couple of months ago on this failed breakdown. Of course, I would always advocate having a process in place that keeps you in the trade longer. And yeah, I think very, very close to hitting upside objective, and hopefully it can reward those holding with a further breakout at that level. Potential inverse head and shoulders for ARC Innovation. I like it above 132.50. We have Zscaler disclosure. I own plenty Zscaler. It was also recommended to our clients and members a couple of weeks ago. It's doing okay. I'm looking for a further breakout here. I'm not viewing this as any significant level of resistance or anything like that. What we're looking for with resistance is pivot points, and a pivot point defined, I'm looking for 10 bars either side of a high or a low, and for me that hasn't been created, and I'm just looking for a simple continuation of the uptrend next week. Deere & Company, very, very close to approaching our upside objective here at $400. I think if it can get above $400, it's one of those names that could go much higher. The reason I say that is, Deere & Company, traditionally, manufacturing equipment, very, very similar to Caterpillar, but in recent years they've actually started to move more towards the innovation and technology, and it's for that reason I think Cathy Wood over at ARC is very big on Deere & Company because of the innovation, and I like the company, I like the stock, and certainly disclosure again, own it, and it's been recommended to our clients and members on this breakout here, and it's close to hitting our upside objective in the space of a couple of weeks. Applied Materials, semiconductors last week taking a little bit of a hit. I think the SMH declines, I think it declined 3.5%, and again it's in a range bound environment at the moment. Again, I don't mind these when they pull back. It has to make sense to me. Certainly if I liked it at the breakout at 145, I sure as hell like it on a pullback to this level here around 123, 125, and of course using Fibonacci, if it is going to make a run higher, I think that's a logical target and a logical number to aim for. Lots of messages on MGNI. Now, I like the company as well. This is a stock that done very well on last year on this massive uptrend. I loved every second of it. Since then, it's pulling back. It's incredibly choppy. I've got an eye on this level. I think we've had earnings out the way, and it's not been a great reaction. So one of two things is going to happen here. I think that there's a headache coming if it breaks below this level, and I think if it can get above 38.50, I think for me, I'll probably watch this level because I do like, as I said, I like the company. I like what they do. But I'm going to keep an eye on this level to see if there's some kind of buying signal. Otherwise, I'll just buy it back above 38.50. I want to just have that security to know that this chop is over, and buying here probably doesn't give me that security, but at the end of the day, it's a decent buy point, if you see what I mean, just because it's in a range and, you know, technically bottom of the range to the top. But I think the security for me might be above 38.50, but I'll give that some waiting next week and see what happens. PLTR, again, sideways range. This stock gets a lot of airtime, and I like it above $28. And we also have CDNS, again, another great tech company, rising relative strength. It has broken out, so again, we'll see what happens there with CDNS. But certainly that's the analysis for everybody. For those of you that maybe struggle with technical analysis, you can maybe stick around for a second here. But if you did get some value from that, please do subscribe to our channel. Let me know in the comments what you think, if there's any names, any charts, and if you have lots of social media followers, feel free to share my work. Helps to kind of get the work out there. But if you are wondering what it is that I do, I have my website over at honeystocks.com. If you're somebody that values technical analysis, we provide our weekend analysis to all our clients and members. We've got hundreds of members, and we provide analysis like you just watched every weekend, although in a more bite-sized chunk. We provide trade ideas. I'll show you what that looks like in just a second. We have our halftime analysis, which we provide every Wednesday. We provide an active trading community for those of you that want to bounce ideas off and build and network with a community of investors and traders from all over the world. You would have full access to me, so charting support. If you need a second opinion on a chart, you have a professional analyst at hand to provide a chart. We also include our technical analysis program, which is absolutely massive for those of you that would like to learn technical analysis. It helps you to understand all the little nuances, all the intricacies of my work, and it's had incredible feedback. So feel free to go and check out our website. But just to kind of show you what I guess my work looks like, this is a recent alert that went out for Cloudflare. Now this is still going. This is up at around 125 now. It's been a massive winner. We've got Square, recent alert that went out. Again, range bound play. Again, our upside objective has been met on this one. We've got Deere & Company, as I was saying just a couple of minutes ago. This was a recent alert that went out 10 days ago. We've got Antero Resources, that was a massive winner. And we've also got Plug Power, which was a massive winner as well. So very unique in what I do. For those of you that know anything about, certainly professional analysis and I guess the investment world, we're all bound by a code of ethics, and I log every single trade idea that I have ever put out to our clients and members. I've done this for the last 3 years. So what that should hopefully do is allow you to go on and have a look to see if the types of names that I like to recommend are the types of names that you like to buy. I'm not pushing penny stocks. Nobody pays me to recommend stocks. It's quality names, logical prices, using logical analysis. So feel free to go and check that out. As I said, every single idea has been logged, and I've done that over the last few years. But what do my members say? Well, this is a recent renewal email. You can have a read of that, but this is the response. Your guidance has made my year, not only because of the returns, but the education and the community as well. That's one of our annual members, obviously happy to renew. We've got Vince, second year in a row, trading account is up over 100% for the year. Another one of our members, this is the equity curve, and this is the S&P 500, and this is our members equity curve. He just wanted to thank me for obviously helping him along the way. Another one, trading portfolio is up big, has anxiety that's going to lose gains, but that's a good problem to have in my world. Another one of our members broke 100,000, now up 160,000 now. So that's what my work does. But feel free to go on to our website. You can go ahead, you can sign up directly on our website now, and feel free to go and check that out. But if you've stuck around to the end, thank you very much. I think if you're looking to get away from day trading, maybe you're looking to learn technical analysis, maybe you're just too busy to filter through thousands of stocks every week, maybe you just want to be part of a community and have access to a professional analyst day in, day out, it might be a good fit. But I'll let you go and do your own due diligence and see if it looks like a good fit for you. But if you've stuck around to the end, thank you very, very much for watching. Have a great weekend, and maybe I'll welcome you soon. Thanks.